some more stocks. But for now, we have our next guest joining us. Sandeep Shah, Managing Partner at Motilal Oswal Private Wealth Management, is joining us. Sandeep, good afternoon. So, it's been a really good going for the market. Now we are within 10% of an all-time high. Do you reckon this market could keep surprising and could actually hit an all-time high?
For the market to hit an all-time high, I think you would need, irrefutable evidence of a cure for COVID, and we should be, just around the corner for an actual vaccine launch. So currently, I would actually be willing to play for a little more upside from here. Of course, it's also a lot of it is based on news flow. And the point really that I was trying to make is that the market is trying to price in what a post-vaccine COVIDized world will look like. However, we're not yet there, even though the market is focusing on that. And even if this is, possibly the beginning of a new bull market, I had given a buy call at 7,500 and 8,100 Nifty. But I think it's time that, to take a restock of one's portfolio, whether it's funds or stocks, and perhaps realize that some of the large caps valuations are pretty much, if not overpriced, at least fully priced. So while, market momentum and sentiment and news flow can always take markets higher, I think this is the time to be a little careful here, in the sense that you may not want to allocate incremental capital in one go to equities now, though I must admit in the same breath that the broad market continues to look very attractive. Small caps, mid caps, I think they're still coming out of fairly long-term bear markets, and they've got a long runway here. But it's just a sense that if you are allocating to large caps, then you want to maybe stagger your flows and not do lump sum, because if some news flow does turn significantly negative, thankfully so far we're just seeing localized lockdowns, and that's a far superior method, both economically and otherwise, than an all national lockdown. But news flow could go back and forth. The economic activity, of course, has been picking up. There is a lot of pent-up demand which is getting used up in the system, but I think one would want to be a little careful and see whether that pent-up demand sustains beyond a quarter or so. And there could be sectors, especially on the discretionary consumption side, where we could again see a bit of tapering down of growth there, or of the revival there from the low base. So yes, I'm not ruling out an all-time high, but that's not my base case. I would right now play for 11,400 to 600 and then wait and watch and stagger my flows.
Okay, so not working with a base case of an all-time high. All right, but Sandeep, hi, good afternoon. I was going through your note, and it's very interesting. You have come out with the phrase anti-fragile businesses. So that's the space to invest into. I guess you're talking about COVID-proof businesses and businesses that can sustain in this challenging environment. Give us a few names here. I mean, which are the companies that you're looking at?
So you picked on the most interesting part, actually. The term anti-fragile was, of course, coined by Nassim Taleb, right, the author of the Black Swan. So what he says is that anti-fragility is beyond resilience and robustness. We keep talking about resilient businesses, robust businesses, but these kind of businesses, what we expect them to do is resist any shock like the COVID crisis and still stay as strong as they were before the crisis. Now, with anti-fragile, what we are looking for is businesses beyond resilience and robustness, and we're looking for businesses that actually get better, which use this opportunity to innovate, to cut costs, to gain market share, and therefore come out significantly stronger. And it's actually, in a way, also commonsensical in some ways, because when companies are pushed to the edge, that's when actually two or three things happen, right? Some of the smaller players, smaller leveraged businesses do fall out from the fray. The stronger businesses think, innovate. They say, how do we, our sales are down, maybe even if temporarily, how do we cut costs? How do we get better? How do we, give a better solution to the customer? And so on and so forth. So those are the kind of businesses that you want. And so to that extent, obvious case of, fragile businesses would be, your companies leveraged, currently in discretionary consumption like travel and tourism. What it means is that basically anti-fragile businesses could be essential products, businesses which survive, which provide essential products, which have low leveraged, which are innovative, and which have gained market share during this crisis. And not as a one-off, just because some companies not been able to, smaller companies not been able to supply, but because they've actually innovated as well. And so we've actually launched, we're about to launch actually a product which will actually focus on these kind of companies. And I think this is, the phrase, the need of the hour. This is exactly the kind of business that, frankly, most investors are actually looking for.
Okay, so what kind of names come to mind, Sandeep? For example, Britannia has done well. HDFC Bank's numbers look good. I mean, these are the kind of companies which have been gaining market share in this environment. If you could give us a couple of broader ideas.
Right. So, as you rightly mentioned, consumer staples would obviously fit in. Sectors like insurance would fit in. Pharmaceuticals could fit in. I mean, there's a wide range of sectors here, but you also do need to be a little careful in the sense that there could be certain businesses where the surge in demand is one-off because of COVID. So while 99% of businesses might not, telecom, of course, technology, these could be potential sectors, but there could be businesses which actually have gained because of COVID, which could be one-off. Now, for example, just because people aren't going out of their homes, there aren't street hawkers, offices aren't running, so street food isn't there. So maybe that could lead to an increase in biscuit consumption, right? But what you're looking for is sustainable consumption. You're not looking for these spikes here. So, so that's the broad backdrop, in which I would place this.
Okay, but aren't some of these spaces become too crowded? I mean, insurance, for example, right? Anyone and everyone is bullish on the insurance space. You think that story is done now, or is there still more to go?
Just because, see, the most powerful, in fact, wealth creating idea in equities is actually, the power of compounding, or the so-called compounding machines, companies that are doing well and will continue to do well. And there are a host of such companies we've seen in India, right, which and globally, who are doing well and continue to do well. Now, the point is that today, see, what you've got to also look at is what are the long-term penetration rates for insurance in India? Where is per capita GDP going to grow? Look at the sentiment that is there within the population in terms of safety first. This is a time that if insurance companies were able to operate, in a more lockdown era, you would have probably seen a surge in insurance policies, whether it's medical policies or life. I can anecdotally tell you that we see a lot more clients who are actually going to the drawing board and figuring out their estate planning, what would happen to their assets and their estate after them. And so at times like this actually forces people to think more about safety and so on. While you might have an impact in unit sales, but these are short-term blips. So you want to ignore those. You want to focus on the long-term picture. Where will India's per capita value of insurance policy, where will it go? How many multiple times will it increase from here? And I think that's really what we've got to focus on.
Okay, Sandeep, we'll leave it there today. Thanks a lot for joining us. That's the word from Motilal Oswal Private Wealth Management. The 3 p.m. move, let's see, doesn't